If you continue to own government bonds, particularly G7 government bonds, at these yields, you are going to get poor very slowly.
Yeah, absolutely. Absolutely. Government bond yields are a reflection of financial repression. We cannot say that government bond yields are showing a figure that indicates that inflationary pressures are transitory when the central bank of that country, be it the United States or in the euro area for all of the countries in that area, when the central bank is 100% of the net issuances, because it's artificially depressing the yields. Therefore, the owners of those bonds are going to see a very important risk. One is real and nominal losses if tapering starts to take effect. The second is that they're taking a very aggressive bet on inflation coming back very hard down in 2022. So those two things indicate why it's very difficult for the Fed or the ECB to really taper, because they continue to need to be 100% of the net issuances of sovereigns, because the disparity between what an investor would require for those yields to be in the current conditions and the yields that we see right now is so wide that we would need to see in some Eurozone countries a 300, 400, maybe 500% increase in yields for investors to start thinking about purchasing sovereign bonds at the current yields. When looking at what they should be considering the inflation and the growth of the economy. Therefore, I think that, yes, government bond yields are not reflecting the reality. More importantly, the central banks are in a very, very difficult situation because the disparity between the reality and where they are is so wide that it can create significant ripple effects.